Today's show is sponsored by Juniper Networks. Future belongs to the fast, and the cloud is where speed happens. In today's cloud-native world of microservices and containers, there's mounting pressure to deliver an excellent application experience. Enter Juniper Networks Contrail Networking, which orchestrates virtual networks and network services at the performance and scale required of the largest, most dynamic clouds. It's simple, open, and agile. Contrail Networking provides a consistent networking and security experience for multi-cluster deployments running in the environments that you care about in this open, cloud-native world. Don't just take their word for it. See how it's being used in the wild to scale network infrastructure beyond the data center and enable the next generation of enterprise and telco clouds. Check out juniper.net/cloudcast to learn more. That's juniper.net/cloudcast.
Cloudcast Media presents from the massive studios in Raleigh, North Carolina. This is the Cloudcast with Aaron Delp and Brian Gracely, bringing you the best of cloud computing from around the world.
Good morning, good evening, wherever you are, and welcome back to the Cloudcast. We are coming to you live from the massive Cloudcast studios here in Raleigh, North Carolina. Good to be back with all of you. Another Sunday perspective show, another chance to sort of dig into a topic a little more, less interview, a little more digging into a topic. And one of the things that we had done when we first started doing these Sunday perspective show was we kind of did some lessons learned from. And a lot of times in those early ones, we looked at some technologies that had started off with a lot of promise. A lot of the industry was really excited about them. And then they sort of maybe didn't quite deliver on the world changingness of what they did. So we had done some stuff on OpenStack and Docker and Cloud Foundry, and got a lot of really good feedback on that. I think sometimes people appreciated that we tried to be very neutral in those. We don't have a dog in the fight. Technology comes and goes, but more importantly, I think sometimes it's important to have some perspective, some historical perspective on how we got here. It's technology has a tendency to repeat itself. If you pay attention, there are certain steps that companies take or technologies take, depending on if they're cloud services or open source or whatever. And I want to do another sort of lessons learned from. And this one isn't going to be sort of in the category of things either that didn't make it or that we expect to not make it, but one that we've followed for a long time here at the Cloudcast, and that's Hashicorp. And Hashicorp, the corporation, has just recently, in the last couple of weeks, put out their S1, signaling to the market that they intend to have an IPO sometime soon. And Hashicorp is a company that we've probably had on the show as much as any other company in our history. And part of the reason for that is they're just, number one, they're just super nice people. They've always been super nice to us. We have known Mitchell and Armand and Kevin and the few folks who really kind of started the company since it was literally two or three of them. We remember going up to their offices out in San Francisco when, it seemed like literally, it wasn't a dorm room, but it felt very much like a dorm room. I think it was two little tiny things that probably used to be an apartment, and talking to them. But they've been really, really good about being on the show. We're not doing the show because we like them a lot. I mean, we do enjoy covering stuff that they do, but they've always been great at doing the one thing that we really always try and do on this show, which is let's educate people. Let's take some topics, find some people that are really smart, take some topics and ask questions and use it as an educational experience. And so, as I mentioned, we've probably had them on more than anybody in the show. I think we started having them on in 2013. It was right around the time when people were talking about this thing called Vagrant quite a bit. Mitchell came on. He just was kind of talking to us about, what it meant to automate things. And, the reason why he had built Vagrant and kind of his mindset of what he had done, having come from, I believe, just having run an ISP or, being an sysadmin for some sort of ISP or internet service provider. And, over the years, they've always sort of helped us understand new technologies, helped us understand why they're doing what they're doing. So we thought it would be very interesting to sort of figure out, how did they get to the point where they're making it to IPO? Because a lot of companies don't make it to IPO. We've had lots on the show who didn't make it to IPO, but also, open source projects that, maybe didn't necessarily survive, and maybe why Hashicorp has survived longer than others and how we got there. So we're going to get to digging into some of all that right after the break. Today's show is sponsored by BMC. And BMC wants to know, is your business on its A game? The A game is when systems are intelligent by learning from markets, where automation is paramount yet effortless, and when technology and people work as one in an enterprise. The A game is your business at its absolute best. BMC calls this the autonomous digital enterprise. Find out more at bmc.com/agame. That's bmc.com/agame. Today's show is sponsored by Datadog. Now with cloud security posture management, Datadog allows you to see compliance scores across your infrastructure and track conformance to industry benchmarks such as CIS and other regulatory standards, out-of-the-box cloud and infrastructure configuration rules. Datadog Cloud Security Posture Management, CSPM, performs configuration audits across cloud accounts, hosts, and containers. As a special offer for Cloudcast listeners, you can sign up for a free 2-week trial to see for yourself how Datadog can elevate your cloud infrastructure security posture by going to datadog.com/security-cloudcast. That's datadog.com/security-cloudcast. Sign up now and receive a free Datadog t-shirt. And we're back. And as I mentioned at the top of the show, we're going to dig into Hashicorp and their S1 and a little bit of kind of historical, how they got to this point and, kind of our perspective on, why we think it's possible that they are, now thinking about doing an IPO when maybe some other companies didn't make it to IPO. We're going to do a little bit of comparison to them to some recent other IPOs that came out from technology companies that had a big following and had a lot of expectations and so forth. So let's dive into a few basic things first. They did announce their S1. We'll put the link in the show notes. Also, a couple of good articles that were written by folks like Clouded Judgment and others that have kind of dug into their financials and what they look like, especially as they benchmark them against other companies. But let's look at a few things real basic and maybe do some comparisons just against some things that a lot of us know pretty well. Current revenue, $295 million. That's over the last 12 months. So about $300 million in revenue over the last 12 months. Gross margins, 82%. Revenue growth, again, over the last 12 months, 55%. So healthy growth on $300 million. They have taken basically $350 million in funding. So I think they got up to an E round. So basically 5 rounds of funding. Operating margin, 22%. And net revenue retention is 124%. So what that means is, a customer that spent $1 with them last year is now spending about $1.25. Or if they spent $100 last year, they're now spending, about $125 with them. So good to see, you want to see that number growing year over year. Basically means either the customer's using your technology successfully and they have a need to use more of it, or in some cases, you have additional technologies or products in your portfolio that you're able to sell as an add-on to something else somebody's used. So let's kind of compare them to just another company who isn't necessarily in the exact same domain as them, but recently IPO'd, a company that a lot of people know, and that's GitLab. So GitLab, last 12-month revenue, 179, so call it 180 million. So 180 million versus 295 million for Hashicorp. Gross margin is 88% versus Hashicorp's 82%, so slightly higher. Revenue growth, 72% over the last year versus 55% for Hashicorp. They've taken around $414 million in funding versus $350 million in funding versus Hashicorp, so a little more, basically, the equivalent of like one more round. Their net revenue retention is 152%, so Hashicorp 124. So again, getting $1.50 for every dollar they took in the year before, so really good. And then their operating margin is much better, 50% versus Hashi at 22%. I'm not using those to make any sort of judgment on one company versus the other. I just kind of wanted to use them as a comparison, one versus the other recent companies in this sort of cloud native space that have recently gone IPO. Now let's compare that to another company that we had covered in the past that many people know and follow, Pivotal. So Pivotal, 2018, I believe, roughly went to IPO. So Pivotal, kind of a very different sort of company. Again, in the cloud native space, early in the cloud native space, but same sort of time frame as Hashicorp, getting started 2013, 2012, 2014-ish timeframe. Very, very different capital structure, though. They had done $509 million in revenue as of the time of their S1. So again, versus 350 for Hashicorp, or roughly 200 million for GitLab. Gross margin was only 55%, and again, part of that was because they were doing much more consulting business than they were software business. Although the software business had begun to ramp up for Pivotal, but lower gross margin. Revenue growth for Pivotal at the time over the last 12 months, their IPO was 22%. So again, comparing that to 55% for Hashicorp and 72% for GitLab. And they had taken in $1.7 billion in funding. So a lot of funding, a lot of people at Pivotal. So again, very different rounds of funding. Again, Hashicorp had taken $350 million and GitLab had taken $414 million. So, nearly 5 times as much in funding. So just kind of throwing those numbers out there to give you some sense of, how Hashi compares to some other companies we've recently seen that are, sort of in this cloud native space. Obviously, Hashi is much more infrastructure centric, automation centric, and so forth. Some aspect of applications, but also very security centric. GitLab much more DevOps centric, DevSecOps centric. Pivotal much more application centric. So, 3 companies that very, very well known, somewhat different, structure in terms of their funding and their margins and so on and so forth. But as I think about Hashi and what's made them successful or what's made them different than other companies in this space. So if you think about kind of who Hashi competes against, it was always sort of talked about oftentimes, in the automation space, it would be Ansible, which, was eventually acquired by Red Hat for about $150 million. They never really, grew big enough to ever get to an IPO. Red Hat snatched them up very early in their life cycle. So a little bit tougher to compare against them, but they're a very similar company in that started with open source technology, built around automation, never really fought with their community, really was very community friendly. Chef was in that space. Chef got started earlier in the kind of infrastructure as code space, DevOps space, really kind of helped define DevOps, but never really found a second product beyond Chef. Or what used to be called, I think it was called OpsWork or OpsCode, became Chef. But they sort of struggled. They eventually got bought out by private equity. And then Puppet has taken a lot of funding, never really made it to IPO, and that whole sort of space, probably lost out, became 3rd or 4th in that market space to Ansible and Hashicorp and some others and so forth. So it's not that just one company is going to win in a space, right? There can be a couple of different winners, but I think when we look at it, one of the really interesting things that we always noticed about Hashicorp was they always had a very pragmatic, user-centric approach, right? They were always coming from the perspective of what tool would we build if we needed to solve the types of problems that their customers were solving, right? So number one, everything they did was always open source. Number two, as I mentioned early on, Mitchell and some of the early folks had come from really the operations side of the world, very similar to the way we used to talk to the folks from CoreOS, had very much come from the operations side of the world and were building tools that they felt like would have really helped them. So I think they were always very determined to build things that they would have built for themselves, and that really helped them connect with their users and their communities, right? Like people felt like they really understood the space and they were building for that space. Second thing that we found was really interesting, and this is going to be a really interesting comparison to GitLab. Back in the day, if we go back 5 years, 10 years, whether you look at a Pivotal or you look at some other things that have come along, GitLab and so forth, they tended to start with something, but then as they grew and they wanted to sell more to their customer base, or they wanted to solve more problems or whatever, they tended to build more and more of a stack, much of a layered stack, in which you not only could buy sort of the pieces and parts, but then if you kind of wanted more, you'd buy this sort of layered stack. And that approach, on one hand, has worked very well. It's sort of the idea of you're a platform and then you build capabilities on top of the core platform. But what's interesting to watch is, the cloud has really changed how we think about technology, right? We used to be very applicable or very very, very open to the idea of, buying the complete stack. It solved a lot of problems for you, and it came together. You probably are going to get some bundled discounts on pricing and so on and so forth. But what the cloud really ended up doing, and AWS in particular, was not building sort of stacks of things, but really building individual tools, but doing it at a cloud level. So very much the sort of Unix individual tool approach. And the reason I bring this up is that if you haven't paid attention to Hashi in a long time, there was a thing they did early on, probably a couple of years into their existence, 14, 15 timeframe, where they introduced something called Hashicorp Atlas. And what that was really taking all of their different tools, Console and Vagrant and Terraform and Vault and a couple other things at the time, and trying to sell them as a complete package, right? Like you sort of got everything. And what was interesting was they made a lot of noise about that. It was a big push, and we did a show about it. And then maybe 6-8 months later, it went away. And I think what they realized was, the buyers and the users of those things didn't necessarily want to buy everything together, right? There was enough, the buyer of Vault, the user of Vault was going to be different than the buyer and the user of Terraform, was going to be different than possibly the buyer or the user of Console. And so it was probably very hard to find a buying center that wanted all those things. And so I think it's interesting that they quickly realized that they were better off sort of selling or having projects, open source projects for the individual projects and not necessarily forcing them to be pushed together. And again, I use that as just an interesting kind of comparison point versus GitLab, which has continued to push this idea of the GitLab platform and adding more and more capabilities to it. And again, it'll be interesting to see which one of those approaches tends to win out, right? If the cloud approach tends to win out, then you would think sort of Hashi's approach will continue to do well. If we realize that we're really in sort of the more mainstream users stage of the cloud, and this is the same sort of challenge that AWS has and some of the others have. People may want to be buying more solution type of oriented things, and that's where GitLab is taking their strategy and their product building. So it'll be very interesting to watch those two. I think. If you're doing that, you really have to be very aligned to a pretty well-defined buyer or a pretty well-defined set of use cases. It's hard to take that sort of platform level approach if your use cases are all over the place, right? So that'll be really interesting. Next thing, that I always thought was interesting about Hashicorp was early on, they were very aligned to usage in the public cloud, right? So they were very, very aligned to making sure their stuff worked great with AWS, eventually worked great with Azure and then Google Cloud and other things. But they were there in the early days, right? They were one of the tools that the earliest adopters using the cloud were using things like Terraform. And, it became very much the de facto standard, right? Could you use Chef or Puppet or Ansible? Sure. But Terraform was really built for that sort of thing. So they gained an early foothold in being the one that was really good for the public cloud. Obviously, we've seen the public cloud take off in growth, but if you went back to 2013, 2014, it wasn't obvious that it was going to be as big as it is now, 6, 7, 8 years later. So, making that decision to really focus on that early on, I think was super important. Another thing that I'll talk about, and this is going to come out sort of harsh and maybe a little bit unpleasant, but they didn't actively fight with their community. Right? I mean, if we compare them to the way that Pivotal treated the Cloud Foundry community or Docker Incorporated treated the Docker community, you never hear anybody say bad things about HashiCorp. Whether it's the corporation or whether it's how they treat the open source communities that are around their open source projects that they started. They never went off with this big idea of we're going to change the world. We're better than everybody else. Our culture's better than everybody else. We know what developers, we're going to change the way developers work. We're going to change the world. There never really was a whole lot of bravado, and I think a lot of that comes from the personalities of Mitchell and Armon, who have run the company for a long time. But they were just more pleasant in the community. And, there's sort of a, nice guys finish last, or should nice guys finish first, depends which side of the Michael Dell book you're on. But, HashiCorp and the folks leading HashiCorp were always very much about just, hey, we're putting technology out there. Hopefully you'll love it, but we're not going to fight you over it. They made some decisions to, go against some of the mainstream things. They never really, tried to build Kubernetes. They weren't going to build a distribution of Kubernetes. They were going to stick with what they had built in terms of container orchestration and so forth. And I think that served them very well, right? They eventually figured out where they were good. It tends to be Vault and Terraform. Not that the other products aren't good. If their customers like some of the other things that they do, they're more than happy to to support those folks. And that may not be the most mainstream of things, but for what they do it very, very well. And they've never been the ones who turned people off, and they've never been the ones that the rest of the community said, boy, those guys are jerks. We should all get behind this alternative thing. They just said, we're going to build things that we think are going to be useful. We're going to, obviously they'll compete where they compete in the commercial market and so forth. But, being a good citizen, being a good person, I think has benefited them. And I think it just is a natural extension of the people that run the company. It's who they are. They've always been very remote friendly. So, things like COVID coming along wasn't going to disrupt their company. It allowed them to go get people no matter where they were. They weren't, kind of deterministic that they were going to have to be in San Francisco. And I think GitLab has a similar mindset of, remote first, remote always, remote friendly, those sort of things. I think those are going to play even more dividends in the future than maybe they even have in the past, just given, what all's changed with COVID and things. Next thing I had on my list was, and a lot of open source centric companies don't necessarily figure this out, but, they had a commercially viable product early on. And for a lot of folks, they don't necessarily understand what Hashicorp does, or they know Hashicorp best for being in the sort of automation business, things like Terraform and so forth. But they made most of their money. I mean, if you really boiled it down, they're a security company. They made most of their money from Vault. And I remember really, really early on, again, I mentioned that we went out to their offices, and I forget what the reason was, but a few of us went out to their offices. I think it was Aaron and I and some others. And I remember talking to Kevin, who was the original marketing person. He may still run marketing, I forget. But he said, "Yeah, we're sort of a security company. Don't tell anybody, right? Like, it was kind of a quiet secret that they were making their money on Vault. People were willing to pay them for Vault. It paid pretty well, at least compared to other things, and it allowed them to keep doing the other things that they were building. Right? They felt very passionate that things like Terraform and Console and other things needed to get built. They were tools that had to get built, but they were making their money off of Vault, and people were willing to pay for it. And it's interesting. People don't really think of them as purely a security company the way that Palo Alto or somebody else is, but they are very much a security company at the core of at least how they monetize things. And that's, I think, a little bit unusual that the way that they monetize isn't terribly well known, but they figured out how to be that at least initial revenue source. They do make money on Terraform, and if you look through their S1, you'll see some of that. But that part is really, really interesting, just to sort of see. A lot of companies never figure out how to monetize that first product, that first thing that people like and so forth, and they figured that out. And quite honestly, that's half the battle. That's a lot of half the battle. Now that'll be more challenging as they go IPO, because Wall Street will expect certain growth rates and certain things, but they figured that out early on. And I remember talking to Mitchell early on when it was just first Vagrant, and he was like, "Yeah, I'm more than break even on just the VMware licenses of Vagrant, and it allows me to do Vagrant for Linux and for other types of things." And so they've always been very conscious of yes, taking VC funding when it allowed them to grow, but trying to be very conscious of how to run a business that was profitable on the things that they could control, and not just sort of telling the world, well, we'll eventually figure out how to monetize things. And then the last thing that I think about with HashiCorp, and again, I've probably missed a lot, and for anybody who's within the company, you're probably, if you're listening to this, you're probably waving some red flags going, hey, no, you missed this and you missed that. And if we did, we apologize. But this is just sort of, our outside view of what's made Hashi successful, and, may continue to make it successful going forward at the IPO. They're hitting this IPO at very good timing, right? I remember for a long time, there was a lot of us who would sort of question, like, who's going to buy Hashi, right? If they're taking $350 million at the normal, 10x sort of rate that people pay above what's been taken in, it's a $3.5 billion company. It's a multi-billion dollar company. And we sort of say, well, I don't know. I guess they'll have to get to IPO. And like we said, they're now up around $300 million. They're growing 50-something% year over year. So, they start to become a pretty interesting business. And the timing of it could probably couldn't be better, right? If they had tried to IPO 2 years ago, maybe the market wasn't as excited as it is right now. Maybe the market's a little too hot right now. Maybe you could argue, but I think if you align it to, hey, we've got a profitable product, we've got growth rates, we're aligned to the public cloud very well, we don't fight with our community, we're still able to innovate, the founders are still around. Those are a lot of very, very good positives that are there for the company. And so, I'm not making any judgment one way or the other how I think their IPO will go or how successful it'll be long-term. Please don't take this as any sort of, stock advice or investment advice. We are definitely not an investment advice show, but, I thought it might be sort of interesting to, we've covered the company for a long time. We've always enjoyed talking to them. For no other reason, like I said, is they've always understood that in talking to us, they were just educating us, right? They weren't trying to push anything, down our throat. They weren't trying to sell to us. They were very clear that they have an opinion on things, and this is their opinion. But they were very much about, let's educate the market. And if we educate the market and we put good technology out there, there's a possibility that good things will happen with them. And it seems like, if you look at their business, a lot of the fundamentals are very strong. They're very interesting. And again, I used a couple of benchmarks. They sort of fall in between, but closer to GitLab than Pivotal. And that's a good sign given how GitLab has done with their IPO and subsequent, at least first quarter or so forth, the market. So with that, I'm going to wrap it up. Hopefully some of this was sort of interesting to you. Again, I always like to sometimes do these historical things because I think there's lessons to be learned from, past companies, good and bad, and lessons to be learned from companies that are kind of walking in similar footsteps. So with that, I'm going to wrap it up. Hope you enjoyed today's show. Hope you learned a little bit something from it. As always, thanks to everybody for giving us feedback. We got a really nice write-up as the #1 cloud podcast here recently. If you check our Twitter feed, you'll see it in the notes. But thanks to everybody. We couldn't do it without you. We couldn't do it without your listening each and every week, without telling a friend, without helping us grow the show, following us on Twitter, giving us feedback in all the places you get your podcast, and just, giving us feedback on what you want to hear, right? So show@thecloudcast.net. Send us your feedback. Send us your suggestions. We've been getting more and more of those lately. We love hearing from people. So with that, I'm going to wrap it up, and we will talk to you next week.
Thank you for listening to The Cloudcast. Please visit thecloudcast.net to find more shows, show notes, videos, and everything social media.